Okay, guys, the next topic is process costing. Because it is a lengthy topic, I will divide in 3 parts. It is already divided in 2 parts in book. Here I will divide it in 3 parts. So the first part will be the abnormal loss, the normal loss things. In second part, we will study the work in progress. In third part, we will study main products and byproducts. Okay, so process costing is used in a situation where we are producing multiple units at the same time. And it is mostly used for liquid and gas type of inventories. And usually, until the units are finished, until they go through these stages, they are not usually identifiable. And sometimes we have more than one processes that we worked, that the products go through. So our job here in F2 level is finding the cost that is incurred in each product, the valuation of each product, the percentage of completion of each product. So just to give you an idea, let's say we have material, they come to process 1, then when they are finished in process 1, they will go into process 2. And then when they are finished in process 2, they become finished goods. So it depends on how many processes are involved in an organization. So in an exam, you will be doing a specific process. They will give you information about a specific process. So the way we cost the products, we already saw that a little bit in job and batch costing. We make T accounts, and every cost that we incur, we write on the left side of the product. So on the left side, we write the inputs. On the right side, we write outputs. So on debit sides, we write the costs that are incurred. And on the credit side, then we write everything else, the transfers, the normal loss and stuff. Okay, I have a simple question here. Let's say we have 1,000 units that we input from a process. We have process 1, in which we have 1,000 kgs, 5,000 is incurred for material, 2,000 is incurred for labor, and 1,000 is incurred for overheads. So the total cost becomes 8,000. So when they are finished, we would write that as output on the left side for 1,000 units, and collectively all of it is 8,000. So remember, in process costing, the important thing is making both sides balance, the debit side and the credit side balance, in terms of units and in terms of cost. So we have 1,000 kgs output, which costs 8,000. So if I take 8,000 divided by 1,000, that gives us 8 per unit. But if I look at it individually, we have 5,000 divided by 1,000. We have 2,000 divided by 1,000. We have 1,000 divided by 1,000. And when you combine 5 plus 2 plus 1, it becomes 8. But in real world, what you input does not 100% becomes output. There is usually wastage in the production process. So not all units go into finished goods. So we have something called normal loss. Normal loss is the loss that is expected to happen. It is part of the production process. For example, if you are taking out juice from apples, you buy 1 kg apples, the juice is not going to be 1 kg. Obviously, it's calculated in liters, but if you wanted to weigh it, it will not be 1 kg, because while you are extracting juice, some of it is wasted into pulp. So this is what we call normal loss. So whenever we produce units, we have to have normal loss in our mind. Let's look at the same question now and assume there is normal loss. So let's assume there is 10% loss expected. Whatever we input into a production process, 10% of that is going to be wasted. Now, obviously, it doesn't have to be 100%, 10% every time, but this is just an estimate. We will see in a minute that it doesn't have to be actually 10%, but this is what we believe is our best estimate. So then we find something called expected units, which is input minus normal loss. In this example, our input is 1000 multiplied by 10% loss, which becomes 900 normal loss. Now if I take 1000 minus 100, that would give us 900 expected output. So obviously, if there is 10% loss in a production process, we would not 100% expect that all units will be okay. So we would expect 900 units to be output. Or you could quickly calculate it like taking 1000 multiplied by 90%. Think of it like a discount. So we have 900 output. So then we will have 900 output, and the whole cost will relate to this 900 units. So the 100 loss I'll call it NL. So 100 loss doesn't have any value. So again, balancing both sides. Remember, important thing is you make both sides balance. Now if you look at the cost of the product, 800 divided by 8000 divided by 900, we have 8.9. The previous cost was 8 per unit. Now that in process there is loss, that means we need more input for less the same amount of output. So it means now the product will cost expensive. So whenever companies price the product, obviously one thing is they will add a profit, but another thing is they look at the normal loss that is expected as part of the product. Now, sometimes this normal loss can have value. Maybe it is a byproduct. Maybe you're able to sell that pulp. Or a carpenter, for example, using wood, and then there is sawdust, and there are small pieces of wood. Maybe that can be sold for some value. So sometimes normal loss can have value. If that is the case, we will add that value. So in this case now, if let's say the normal loss can be sold at $5, then 100 units multiplied by 5 will become 500. So the cost of normal loss will become 500. I will write normal loss at the top. So now 500 cost goes to normal loss, and our output are valued at 7,500. So again, balancing both sides. Now if you look at the cost of a product, it is 8,000 minus normal loss divided by output becomes, let me put another bracket, it becomes 8.33, or you can simply take the 7,500 divided by 900. Now the cost reduces a little bit because we are charging on our customers the cost that we suffer, which in this case we are receiving back $5 from the normal loss. The $3 that is lost is divided on these units. So when normal loss has value, it reduces the cost of your output. Next, we have abnormal loss. So normal loss is loss that we expect. In production process, it doesn't always happen exactly what we expected. Sometimes output is more or loss is less. Sometimes output is less or loss is more. So abnormal loss specifically is a situation where we have more loss than we expected. Let's say I talked about the apple juice. You bought apples which didn't have a lot of juice, so you had to use many apples to extract, let's say, 1 glass of juice. So abnormal loss is something that is not problem with the system. Normal loss is problem with the system, and we charge it on customer. It is something that is part of the production process. And then abnormal loss is something that is not part of the system. It is maybe we were not correct. Maybe our estimate was not correct of the normal loss, which if it consistently happens, then we will change that normal loss. Or maybe we actually didn't work as efficiently as we expected to do. But abnormal loss is something that we kind of didn't agree with our customers, so we cannot charge it on customer. So same example. Now let's say instead of 900 output, we have 800 output. So the way to calculate expected normal loss is to look at expected output and actual output. When actual output is less, we have abnormal loss. Like in this case, we have 900 expected output. Actual is 850, so we have 50 abnormal loss. Now, remember, normal loss is always the same. No matter whatever the actual output is, normal is always the same because normal is normal. Normal doesn't mean actual. Normal usually means average. So we don't touch this normal loss. So same value, 500. Now we have abnormal loss as well of 50, which means we have an output of 850. Now how do we value normal loss and output, abnormal loss and output? The same as normal units. 8.33 multiplied by 50, it means, if I round it off, about 417. And the same thing let's go into a little bit details. This becomes 7. And this becomes 3. Now if you add all of them together, they are equal. So what we did is we reduced the cost of output with the normal loss units. So we don't want to charge the whole 7,500 on the output. We will only charge 7,800. So this is something called expected cost. So expected cost doesn't change no matter whatever the actual output is. Expected cost and normal loss, they stay the same. So expected cost is the normal cost. We charge our customers abnormal cost. We don't want to be changing our prices frequently when the output is different. That means our customers would not like that. So they need a consistent price. So in this example, if we see, we have a normal loss of 100 and abnormal loss of 50. So we have a total loss of 150, or if you take 1000 minus 850, we have 150 total loss. That means what the product cost us for the 850 units is 8000 minus 150 multiplied by 5. See, if we can sell abnormal loss, if we can sell normal loss, we should also be able to sell abnormal loss. So that's why we can sell the 50 extra abnormal loss for $5 as well. So if I divide that by 850, our cost becomes 8.52. But we don't charge 8.52, we charge 8.33. By charging, I means the cost. Obviously, we will add a profit, but the cost that we consider would be 8.33, not 8.52, because the 50 units extra loss is something that is our mistake, whether mistake in estimate or whether mistake in actual production. Next is abnormal gain. Abnormal gain. Now, gain is not something that you believe you have 1000 units input and they become 1100. No, output will not be more than input. Gain something means simply that our loss was less than expected. So abnormal loss was when output was less expected, it was less than expected output. Abnormal gain is when output is more than expected output. So abnormal gain simply means that the actual loss is less than what we expected. So we calculate it the same way. We take expected output minus actual output. If actual output is more, it is abnormal gain. Now let's assume the same question. We have 960 output. Our expected output is 900. Our actual output is 960. We have abnormal gain of 60. It simply means we have 60 more units produced than expected. So normal loss is the same. Remember, normal doesn't change. Same 100 units. And output in this case is 960. We will calculate the cost. Now, if you look at the side, this becomes 1060 and it doesn't balance. So we wrote abnormal loss on right side. And abnormal gain is completely different from abnormal loss. So obviously, it shouldn't come to the same side. In fact, what we do is we write it on the left side. And the reason is we treat it like something extra input into the process. It is something that is extra that came into the process. And valuation is going to be the same as output. So no abnormal loss, abnormal gain, actual output, they are valued the same. I've written here, finished goods, abnormal gain or loss are valued the same. So in this case, remember, we charge expected cost per unit, no matter whatever the actual cost is. So whether we are valuing the 60 units, we will charge the same value, or if we are valuing the 960 units, 8.33, same thing. For 8,000. So now units balance as well and cost balance as well. Okay, so this is it about normal loss, abnormal gain. Now in this case, remember our actual loss is 60 because if we have input of 1000 minus 960, we have 40 actual loss. You can calculate it like this as well. If you take normal loss minus abnormal gain, you have actual loss. Or in the previous example, we have normal loss 100 plus abnormal loss of 50, actual loss. So abnormal loss is added to the normal loss, abnormal gain is deducted from the normal loss. So our cost of the product, because we have 40 actual loss at 5 divided by 960, is 8.13. Now we don't charge 8.13, we will charge the same 8.33 because when there is abnormal loss, we don't charge it on customer. Same way, we don't reduce cost when we have abnormal gain. Okay, so this is one account, that is process account. These figure go to individual accounts, which I will explain for each of the question. So the first account that we made was this one. Let's see how they go to different places. So we had finished goods on one side, abnormal loss, and normal loss. These are double entry. You have to understand. Remember, never memorize double entries, understand them. If we have credited finished process account, we will debit finished goods account, and finished goods inventory, so obviously it will be debited. So debit finished goods, 7,083 and 850 units, and credit process account. Abnormal loss will go to abnormal loss account, credited process account, and debit abnormal loss account. Abnormal gain or loss, you could make one account or you could make a separate account. Here. Let me adjust this. So I've put arrows as well where they went. So credit process, debit abnormal gain. And then finally, we have credit process and debit normal loss. Now, process account is finished. That is balance. Now we look at abnormal gain. So abnormal loss. Remember, I said that abnormal loss can also be sold. So in abnormal loss, there is gain. What is that gain? Is the scrap value that we are getting. So when we have 50 units, which is valued at 417. We don't have 417 loss because we can sell 50 units at 5, which would mean 250. So we will credit normal loss account and debit, credit abnormal loss account and debit normal loss. It will be added with the other loss. So our loss specifically in the abnormal loss is 167. This is not a loss in the whole process. Obviously, we haven't yet sold it. So specifically, the loss in abnormal loss is 167, not 417. So that 150 came here. So credit abnormal loss, debit normal loss. And whenever 150 units is sold, we will credit normal loss and debit cash, like I've shown here. And then when finished goods are sold, we will debit cash and credit finished goods inventory. So you don't have to memorize these transactions. You can easily take something from one account to another account. So if something is debit, you want to take it to another account, so you credit that account and debit account wherever you want to take it. If something is credit and you want to take it to another account, you debit the account and credit the other account wherever you want to take it. So the same thing will happen with abnormal gain. So we have same finished goods, same normal loss, debit. The only difference is that abnormal gain, because this account is debited, abnormal gain account will be credited. And in gain there is loss, because abnormally we had 100 units, we sold that in scrap. Now we don't have 100 units, we only have 40 units that we sell in scrap. So the 60 units at scrap value, which becomes 360 multiplied by 5 becomes 300, we will debit this account and credit normal loss. We are reducing that from normal loss. So our gain here is 200, not 500, because we would have sold the 60 units for 300 anyway. So what we are gaining is 200. So this is the differential gain. In the normal loss, there was differential loss. So whenever we sell the 40 units, we will credit normal loss and debit cash. And finished goods account is the same. Now let's look at kit questions specifically on this part. Okay, some of the questions here relate to the other parts that I talked about, so I will skip them for now. So I will only answer questions relating to the part we just covered. So what quantity of goods production was achieved? A chemical process has a normal wastage of 10% of input in a period. 2,500 kgs of material were input into the process. There was an abnormal loss of 75. So if 2,500 is input and we have 10% loss, that means 250. So we have 2,500 minus 250 minus 75, which is the extra loss. We will have 2175 kgs, or 250 plus 75 is total loss. Deducted that from 2,500, we have 2175. If we had abnormal gain, remember that would have been added here. Next, this relates to work in progress, so I will leave it for now. In which of the following circumstances is there abnormal gain? In a particular process, the input for the period was 2,000 units. There were no inventories at the beginning or end of the process. Normal loss is 5% of input. So if we have 2,000 units and there is 5% normal loss, that means expected output would be 95% or 1900. More than this would mean there is abnormal gain. So this is less, this is more, and this is more. So 2 and 3, in both of these situations, we will have abnormal gain. Here we will have 50 abnormal gain, and here we will have 100 abnormal gain. Next, in a process account, how are abnormal losses valued? Abnormal loss at their scrap value, that is, remember, normal loss, the same as good production, the cost of raw material, the same as normal loss. The same as normal loss and scrap value is the same thing. We value the same as good production or output. You saw that when we valued normal loss or abnormal gain or output, we use the same expected cost per unit. Next, how many liters of material were input into the process during the month? A company needs to produce 340 liters of chemical X. There is normal loss of 10% of the material input into the process. During a given month, the company did produce 340 liters of good production, although there was abnormal loss of 5% of the material input into the process. So they have given us output, they have given us the normal loss, the abnormal loss. They have asked us to find the input. Output is given, so we need to find input. Like in our previous example, let's say the normal loss was 250, and this was our output. So we could have simply taken that and divided by 0.90. It would have given us input, which is 2500. So we are going to do the same thing here. We have 10% normal loss and we have 5% abnormal loss, so total becomes 15%. So if 340 liters is output, so that means 85% would be output of whatever is input. That means input would be 0.85 or 85% means the same thing. I wrote 0.85%. So 400. Now, to double check it, we have 400 multiplied by 15%, 60 loss. 400 minus 60 becomes 340. This is something that relates to work in progress, so I will leave it for now. This one as well. This one as well. Okay. What was the valuation of 1 unit of output to 1 decimal place? A company uses process costing to value its output. The following was recorded for the period: input material 2000 at 4.5, conversion cost 13,340, normal loss 5% of input valued at 3, and we have actual loss of 150. I believe you can do it. Remember, normal loss means conversion cost means labor and overheads. Let's look at the next one. A company operates a continuous process into which 3,000 units of material costing 9,000 was input in a period. Conversion costs for this period were 1197, which have a scrap value of 1.50, are expected at the rate of 10%. There were no opening or closing inventories, and output for the period was 2,900. So let's do this one. We have input. You can make T account or you could just do it like this, whichever you like. But in T account, you will make sure that both sides balance. If both sides balance, you will be confident that your calculations are correct. Otherwise, it is not 100% important to use T account. Okay, we have conversion cost and material cost, both of which is 9,000 plus 11,970. We have 20,970 total cost of input. And we have 3,000 input units, and we have a normal loss of 10%. So 3,000 multiplied by 10% is 300 normal loss. And it has a scrap value of 1.50. So 300 multiplied by 1.50 is 450. So we have to find something called expected cost per unit. Remember, no matter whatever the actual cost is going to be, expected cost per unit is always going to be the same. So we have input minus normal loss divided by expected output. If 3,000 is input, 300 is loss. 2700 would be expected output, and 7.6 would be expected cost per unit. If our output is 2900 units, we valued it at 7.60, that means 20,040 would be our answer. And in this case, remember, we have normal loss, abnormal gain of 200 units, which is 2900 minus 2700. They haven't asked it, but still it would be valued at 7.60. Which would be valued at 1520. So if they asked what would be the value of abnormal gain, then 1520 would have been the answer. So this also seems simple question, so I'll leave it. Which of the following statements about process losses are correct? Units of normal loss should be valued at full cost. Units of abnormal loss should be valued at scrap value. It is actually vice versa. So both of them are wrong. Neither of them is correct. The following question is taken from June 2015 exam. Normally, no losses are expected from a process. Any abnormal losses are sold for scrap. Which of the following calculates the net cost to the company of 1 unit? So simply means expected cost. If there is no loss, then it is total input cost divided by whatever is output, expected output. So total input divided by expected output. Remember, even if abnormal losses are sold as scrap, we don't minus the value. We only minus the value of abnormal loss. So it will be total input divided by, like in this case, let's assume there wasn't any of this. And there wasn't any of losses. So we would have simply taken 20,097 divided by 2,700. Next, what is the credit to statement of profit or loss from abnormal gain in last period? Remember, the amount that is credited is that specific amount, okay? Not the total value. Like in abnormal loss, there will be that differential value. Likewise, in abnormal gain, there would be that differential value. Even though we transfer it to account, but specifically to P&L, the gain and loss would be that differential value. Okay, this 200 like we had, not the 500. Okay, let's see. The following question is taken from June 2018 exam period. A process is subject to a normal loss of 12% of input. Losses can be sold for 5 per kg. In last period, 10,000 kgs of material costing 100,000 was input into the process. Conversion cost for the period were 50,000 and output was 9,200. Let's clean this space. So we have cost, which is 100,000 plus the conversion cost 50,000. This will give us total input cost. And we have 12% normal loss and 10,000 input. If 10,000 is input and we have 12% normal loss, that means multiply by 88% would be expected output. If expected output is 8,800, that means we have 10,000 multiplied by 12%, 1,200. Or you could just simply take 10,000 minus 1,200. It will give you that 8,800. Okay, this 1200 can be sold at 5, which is 6,000. So now take 150,000 minus 6,000 divided by expected output, which is 16.36 if I've done it correct. So we have 12% input losses and they can be sold at 5. We have 10,000 input. Yeah. So we have actual output of 9,200. So that means we have 9,200 minus 8,800, 400 gain. Remember, normal gain, abnormal loss, and output are valued the same. It means this 400 would be valued at 16.3636, which means 6,545. But remember, what we credit to the process account, to the P&L, is when we minus the scrap value from it, which is 45C. Or you could simply done it like this. We have 16.63636 minus the scrap value multiplied by 400, which will give you the same thing. So this is first part of the process costing. Next is work in progress.